So today we have two speakers joining us. Professor Jiro Yoshida will be talking about the situation in Japan. He's joining us from Pennsylvania very early in the morning. And then in London, we have Dr. Filipa Sá, who will be talking about the UK situation. And I'll just briefly introduce them both. So Jiro Yoshida is the Arthur P. Pasquaretta Professor of Business at the Pennsylvania State University and also Project Guest Professor of Economics at the University of Tokyo. He obtained his PhD from the University of California, Berkeley, and his research areas include real estate finance, macroeconomics, and asset pricing. This research has been published in top journals, including the Journal of Finance and the Review of Economics and Statistics. He is also the recipient of the 2007 RUEA Dissertation Award, where he obtained first place, as well as several prestigious fellowships, including the Fulbright Award and Japan Society for the Promotion of Science grants. His work has also been featured in major media outlets, including the BBC, Forbes, and the New York Times. Then from London, we have Dr. Filipa Sá, who is a reader in applied economics at King's Business School, King's College London. Prior to joining King's in 2013, she worked as a teaching fellow at Trinity College, Cambridge. So Filipa got her PhD from MIT, and after completing it, she worked as an economist at the Bank of England for 2.5 years during the global financial crisis. So her research has also been published in top journals, including the Economic Journal and the Journal of Money, Credit and Banking. Her current research areas include capital flows and their effect on house prices, immigration and productivity, and the heterogeneous effects of COVID-19 on different socioeconomic groups. Her research on capital flows and house prices in particular has had a significant policy impact and informed the decision by the UK government to impose a stamp duty surcharge on foreign buyers of UK property from April 2021. So this is the timeline. That was my greeting. So first we'll have a presentation from Professor Yoshida, then followed by one from Dr. Sá. Then for about 10 minutes, they'll ask each other some questions, after which we'll open the floor up to you to ask your questions. So without further ado, Professor Yoshida.
So I'm really happy to talk about the Japanese housing market today, and I like to learn more about the UK housing market. This is a great opportunity. Thank you for arranging this one. So today I'd like to I'd like to start with our current discussion in Japan about housing affordability, especially focused on Tokyo condominium prices. And through the debate and discussion, I would like to illustrate some of the unique features of the Japanese housing market. So let me show you a graph. This graph is the estimated condominium price for a 70 square meter units in Tokyo's 23 wards from 2008 to 2025. So the current debate is about the recent surge in condominium prices. In particular, for the past year, we have experienced appreciation over 30%. So yes, it is really a sharp increase in housing prices. So the media often claim that the Tokyo condo prices are in a bubble. Let's discuss this issue first. So this is a critical issue about the housing affordability in Japan. So my comments are around the whether the data we see is a comprehensive understanding of the market. So my conjecture is that this observation is partial in several ways. 1 in geographical scope, 2 in time frame, 3 in housing type, and 4 in comparison to other assets and inflation. And I'd like to talk a little bit about the driving factors for this price appreciation that I think of. So first, regarding the geographical scope, Tokyo is a unique area in Japan. So this graph shows the migration into 3 major metro areas in Japan, including Tokyo, Osaka, and Nagoya. Of course, in the 1960s, we had a massive migration of people into these 3 big cities. But what's unique to Tokyo is that even after 2000s, Tokyo has been attracting migration or migrating people from other parts of Japan and from other parts of the world. So this increase in demand for housing is a very unique situation only to Tokyo. So when we talk about the Tokyo housing prices, we have to recognize that the Tokyo is very special in Japan. Then this graph compares several things. So first, looking at the graph, we have four different lines, and the thick line ending with a 219 represents the condominium price index for Tokyo. And yes, we see sharp appreciation for the past 10 years. But if you look at the detached housing in Tokyo, which is a solid line, but a little bit narrow line, ending with 134, then you see that the detached housing price appreciation is much more moderate than condominium prices. So even within Tokyo, we see differences by property types. So it looks like a condominium, price appreciation is concentrated in condominium property types. Furthermore, if we expand the geographical scope to the entire nation, then a very narrow detached housing price index ending with a 119 is very moderate. So overall, Japanese housing prices are not really soaring, but it's pretty stable. In particular, if you look back in history to 1984, we had a really big so-called housing bubble in the 1980s. And the house price appreciation at the time was much more extreme and sharp compared to the current appreciation. And also looking at the graph, you see a long 2 decades of deflation from 1990s to 2000. So after 2 decades of deflation, finally, we started to see some appreciation in housing prices. So in the long-term time scope, then this current home price appreciation is not too extreme in my mind. And in particular, if you look at the Tokyo detached housing prices, then the current level is much, much lower than the peak in the 1990s. Furthermore, if you look at the stock price index, which is a dotted line here ending with a 378, for the past 10 years, stock prices increased threefold. And this price index doesn't include dividend returns. So if you include dividend returns, the total return to stock has been really, really large. So compared to other major asset classes, real estate prices are not necessarily extreme in terms of appreciation. So overall, from this graph, I see that current home price appreciation is really concentrated in condominium in Tokyo, and overall in Japan, housing prices are pretty stable. Furthermore, this price index is a quality adjusted index. The meaning of that is we compare prices of the same quality and same building age. So if we keep track of the price of the brand new condominium, brand new detached housing, then we see this price index. But when we buy a house, our house has to depreciate over time because of aging. And aging effect in Japan can be very large. So these two panels show my estimated depreciation pattern for detached housing in Tokyo and detached housing outside Tokyo. You see a very rapid depreciation in property value, especially for structure value. Obviously, land value doesn't depend on the building age. So land value is relatively stable over time or over years or ages, but due to a sharp depreciation of structure, after 30 years, looking at the Tokyo detached housing market, the 40% of the initial value is lost over 30 years. And outside Tokyo, 50% of the value is lost after 30 years, or even including land. So if you take into account this depreciation for your ownership, as well as inflation, the previous price index is a nominal price index, but if you take into account inflation, then the appreciation is even more moderate. Then how can we understand the current market appreciation? This is the diagram taken from my lecture slides. I don't necessarily talk about the Japanese market, but this framework is taken from my lecture. So looking at the left, this is showing some conceptual housing market. And these faces represent the demand for housing for different people. So this person has a high willingness to pay for a house, but this person has a low willingness to pay. Then in equilibrium because of the supplies constraint here, then those three people buy houses and the market price is determined by this person's willingness to pay, which is 40. So imagine this is the past housing market in Tokyo by local people. Now, what's happening in my mind is that we are having migrating high net worth individuals to Tokyo condominium market. So this person with a dollar I marks are foreign people who are buying Japanese or Tokyo condominiums. And this person with a yen I mark is a high net worth individual having the second house in Tokyo. So these people came to the market because of their high willingness to pay. Demand curve shifted to the right. So previously, this person used to be the highest person in the market, but now this person became the marginal buyer in the market, so that the marginal price or the market price is determined by this person right now. So looking at the change, we see a sharp increase in house price from here to here because of the entries of new buyers with high wealth. Is it a bubble? It's usually not called a bubble. It's a change in the composition of demand. So that's my understanding of the Tokyo condominium market right now. And why do we have migrating high net worth individuals to Tokyo for the past few years? One big factor is weak Japanese yen. So the graph shows the Japanese yen USD JPY exchange rate, as well as purchasing power parity published by IMF. So purchasing power parity is the price level or exchange rate that equates the general price levels between countries. So looking at these two lines, currently Japanese yen, which is about 150 yen per dollar, 150 yen per dollar, is really weak relative to PPP. So this means that the foreign buyers experience a 35% discount relative to domestic buyers. So this has been creating a huge demand for a condominiums in Tokyo. So as you know, foreign exchange rates fluctuate significantly. So future, we don't know for sure whether this gap between PPP and currency exchange rate will continue or not. If this gap narrows down, then we may have reduced demand by foreign buyers. So that's a possibility for the future. Okay, so then this is my understanding of the current market, but let's take a look at the housing stock, because as I said, overall in the nation, housing prices are very stable and only have a moderate inflation. Why is it so? One big reason is that housing stock is abundant. Okay, so this is the housing stock in Japan, including commercial real estate as well as residential. So let me give you an overview of housing stock in Japan. So residential structures account for about 3/4 of the total building stock. And within this residential, majority or 2/3 of the residential structures are single family housing structures. And non-wooden multi-family. Basically, this is condo. Condos account for about a quarter of the residential structure. So majority of the housing market in Japan is detached wooden single-family housing. That's something we have to have in mind. Okay, and we have both rental apartment or rental housing as well as owner-occupied housing. Do we have enough size for rental housing? Indeed, rental houses in Japan are very small. In particular, if you look at the graph, the rental market in Japan is really dominated by small apartment with a non-wooden structure. So we call this a mansion, or this is really condos. And you see many stock is less than 30 square meters or less than 50 square meters. So these are really small condominium studio units. And in Japan, we call it a one-room mansion, which is one of my favorite oxymoron. But this is a really small studio, and we call it mansion for a non-wooden structured multi-family apartment building. Okay. But if you look at the owner-occupied housing, the size is pretty distant. The average size of owner-occupied housing in Japan is already 100 to 120 square meters, which are comparable to European housing. And this graph shows the number of rooms per person for owned houses. Japan is here, and on average, by statistics, each person has 2 to 3 rooms in Japan. So this is a pretty decent number. By the way, it's interesting to see that the United Kingdom and the United States are on the far left here, having more than 3 rooms per person. So housing stock in the UK and the US seem to be very, very sort of abundant and spacious. Because of this abundant housing stock, Japan is also experiencing vacancies. Japan is here, and overall vacancy rate is about 14%, exceeding 14%. And what's unique to Japanese market is that majority of these vacant units is vacant dwellings, true vacant units, instead of seasonal houses and holiday homes. So unlike in Spain, France, Japanese vacancies are true vacancy for housing stock. Okay. So we do have a vacant to abundant housing stock in Japan, so that this is going to create a problem in the near future. But overall, regarding in terms of housing affordability, this is also helping people to find a really decently priced housing units. So housing costs are moderate in Japan because of this. So last, I would like to touch upon some pro-supply policy. What kind of policies and past actions created abundant housing stock and enabled affordable housing in Japan. So one big factor is zoning regulation in Japan. And this table shows the general zoning regulation in Japan. Shaded sections are prohibited use by zoning regulation. On the vertical axis, you have different land use, and the top row is the shrine, temples, and churches. And the horizontal axis is for represent the 13 different zones specified government. Looking at the top row, those shrines and churches can be built anywhere in Japan. So all white. The second line here is housing. The housing can also be built anywhere, almost anywhere in Japan, including commercial zones and including industrial zones. So this triangular structure of zoning regulation encourages the mixed use in Japanese residential or Japanese real estate market. So housing can be combined with shops. Housing can be combined, not really combined, but housing can be located near hotels. Houses can be located near some small factories and so on. Only those factories with hazardous waste and hazardous materials are really highly prohibited and allowed only in industrial zones. But generally speaking, zoning regulation in Japan is very flexible and encourages mixed use. So that's one reason why housing can be built abundantly in Japan. Another important thing about affordability, especially in Tokyo and large cities in Japan, is due to transportation system. So as you know, Tokyo has a really, really good and massive transportation network. Because of that, people can commute to the central Tokyo from suburban areas. So this map on the left shows the commuting zone within 30 minutes to a key terminal station on Yamanote line. So you looking at this circle here with the blue marks, you have 50 kilometers from west to east, 50 kilometers from north to south. This is a massive area. So in order to work in the central Tokyo and in order to enjoy amenity in central Tokyo, people don't have to beat up rents and prices in Tokyo central part, but they can simply commute by 30 minutes. In contrast, in New York City, this is the map for 30-minute commuting zones to Manhattan Island. You see only a very small area, 15 kilometers west to east and 25 kilometers north to south. So if I superimpose New York map onto Tokyo, you see a clear difference between Tokyo and New York. And this is one key reason why central Tokyo's apartment rents and housing prices are limited or suppressed, and affordability situation is good. All right, so to summarize what I have talked about, flexible mixed-use zoning enabled housing stock accumulation in Japan. Superior transportation network limits urban rent premiums. Abundant housing stock provides affordable housing choices beyond condominiums. And the price increase caused by new buyers is concentrated in Tokyo condominium market. That's all I have.
Great, thank you very much, Professor Yoshida. So now over to you, Dr. Sá.
Thank you for the invitation, and thank you everyone for attending. So I will talk about the UK housing market, which is quite different from the Japanese one. So it will be interesting to see the contrast. And I'll talk a bit about my own research on the effect of foreign buyers on the UK housing market. So you can see here a photo. You can probably recognize the top picture here. This is Battersea Power Station. So this has been turned into apartments. So you know, some of you who are based in London would know this very well. And it was done with foreign investment, Malaysian investment. So here at the bottom, you see what I see every day when I cross Waterloo Bridge to go from Waterloo Station to work, and is the problem of homelessness in London. So you know, you have this contrast, right? So you have foreign investment, you have an affordability problem. So I will kind of give you a picture of this and of the potential causal link between foreign investment and house prices. So before I do that, just to put it into context, and I have Japan here, you can see here the real residential house price index. This is from the BIS, so the Bank for International Settlements. So it's in real terms, so it's inflation adjusted. And it starts in 1999 Q1. And you can see for different countries how house prices have evolved. So in the UK, you see a very large appreciation here until the global financial crisis. Then during the global financial crisis, prices fell for a couple of years, and then they kind of stabilized. And you can see, you know, there's a bit of fluctuation. They increased a bit. More recently, they after COVID, they increased, as we know. But then after that, they have been falling and are now, you know, reasonably stable. But the overall trend is positive, and you see that prices have basically doubled. This is for the UK as a whole, but they've basically doubled between, you know, the 1999 and the current time. Other developed countries have a similar picture or even sharper appreciation. So you have here Australia and Canada with very large appreciation. France is quite similar to the UK. I pictured here Singapore and US as well. And Japan, you see, is reasonably flat, right? So it, during this period. I don't capture the earlier 1980s appreciation that Jiro showed in his presentation. But you can see, basically a flat line. It goes down a bit and then up a bit. So it's quite different, right? The UK from Japan in that respect. So there are different explanations for this, and there is a literature on this out there. So people have looked into this. Some explanations are more based on the supply side of the market. So the lack of available land for construction, regulatory constraints. Also, we have green belt areas in the UK where it's not possible to build. So areas where, it's basically green space. So that there are supply constraints. So the supply of housing is reasonably limited. And there are also explanations on the demand side. So my research falls into that category, looking at the demand by immigrants, but also demand by foreign investors. And that's the bit that I would like to talk about today. So there's also a macro literature on this, but I will tell you a bit about this work that I've done that is published in the Journal of Economic Geography. So, countries have tried to address this issue of, affordability and increases in prices by adopting policies. So the UK has recently introduced a stamp duty surcharge on non-resident buyers. So foreign buyers have to pay a higher stamp duty rate than domestic buyers. But other countries have also, adopted restrictions to foreign investment. So Australia, for example, encourages foreign investment in new residential projects. So the idea there is that, if you have a new project that is financed with foreign capital, it's going to increase demand, but it's also going to increase supply because it's new housing that is being created. But there are tighter controls on the purchase of existing properties where essentially you're just shifting out the demand curve, but you're not increasing the supply. Switzerland also has restrictions on property purchases by non-residents. Canada went even further, so there's a ban on the purchase of residential property by foreign nationals, which was introduced for a couple of years and it was extended until January 2027, and we'll see if it may be extended even further. Israel also has higher tax rates for foreign home buyers, and Singapore has, like the UK, quite a similar policy where there is an additional stamp duty tax for foreign buyers. So in the paper, I look at this link to try to see if there's a causal effect, right? So, if we start by just looking at correlations, so if you plot the average house price in the UK, so this is the average house price between 1999 and 2019. So this is the actual price. So, this would be £100,000. So you can see a very large increase over this period, so a large upward trend. And we can use data from the land registry. So the fortunate thing, if you do research on the UK housing market, is we have administrative data on prices because every property transaction is registered with the land registry. And the microdata is publicly available. So anyone can go to the land registry and just download the data. So you will be able to see, for every property that gets transacted, you see the exact address, you see the price, and you see some characteristics, but not many. So you would be able to see if it's a flat, detached, semi-detached, but not much more than that. But you know the price and you know the location. So that's very useful information. And there is a data set from the land registry called the Overseas Companies Ownership Data, which records property transactions that are done where the buyer is an overseas company. So that can give us good information on foreign investment, although it's not perfect. So There are a couple of drawbacks with the data. One is that UK residents could have a company registered overseas and buy a property through the company. So for me, I would be counting that as a foreign transaction because it's in the overseas company's data set, but it might actually be a UK person that creates a company overseas to buy the property, right? So it's not a completely clean measure. And we also don't know the ultimate owner of the company. So we know where the company is registered, but most of them are in offshore financial centers. So you would see it's in Jersey, for example, but you don't know where the buyer is actually based. You just know the company is in this, is in Jersey. And so most of the, the countries of where the buyers are based are offshore financial centers, but you don't actually know, the country of ultimate ownership. So there are those drawbacks, but still, it's good information, and it's better than some of the proxies that people have used in the literature. So you can see that there is a positive correlation between these two cities, but then the question is whether there is a causal link. So here I show you average house prices across the UK. So this is in 2019, and you can see prices are higher around London. So that's not a surprise, really. So you can see that there is a lot of regional variation if we look at the whole of England and Wales that we can use here. This is the price to income ratio. So it's a measure of affordability. And you again see it's higher in London. It's also quite high in Cornwall and these areas in the coast. But that's because of second homes, right? So you have people buying a home by the sea, and then not actually working in those areas. So it wouldn't go into the income of the area, but it would push up prices. So, you get these high price to income ratios in those kind of holiday home areas as well. And then when you look at foreign transactions, you can see it's also a London phenomenon, but it's not just a London phenomenon. In Manchester, we have quite a bit of foreign investment as well. So some of the local authorities that attract most foreign investment are local authorities in Greater Manchester, and is mostly apartment buildings that are actually, many of them are financed with foreign investment. So the property developer is foreign. So you see here, there is also a lot of regional variation. This is a table with the local areas with the highest share of foreign transactions. So as you would expect, you have Westminster and Kensington and Chelsea, but you also have places in Manchester. So Salford is a suburb of Manchester, Rochdale. So you have a variety, but most of it, kind of, if you do a count, it is London, right? Westminster, Kensington and Chelsea, City of London, Wandsworth, Camden. So you can see that London dominates the picture, but Manchester is also appearing here in the top 10. So what I do is I use this regional variation to try to identify the effect. So I'm not going to go into too much technical detail, but I will just sort of give you an idea. So what I do is estimate what we call a regression. So I look at house prices in local area I at time t, and I look at the number of foreign transactions in local authority I at time t. So, these in logs. So you can see that this beta coefficient is the coefficient we will be interested in. It will give us the link between foreign transactions and house prices. There will be some control variables, so other things that we think could affect house prices that we would like to control for. And there are what we call fixed effects. So there will be time fixed effects to capture the economic cycle. So for example, during the global financial crisis, you might see prices falling across the whole country. So that would be captured by a fixed effect for that particular year. And you also have local area fixed effects. So these would capture things like, you might think London is special in some way because it's more multicultural. So if you put the fixed effect, it would capture those kind of what is special about that local area that is reasonably time invariant. London has always been special, and that will be picked up by this fixed effect. So if you just do this regression, you don't know if the effect is causal because, there may be other factors that are making the local area attractive to foreign investors and are also pushing up prices. So I use this approach in econometrics called the instrumental variable approach. So I find a variable that is going to shift foreign transactions, but is reasonably exogenous. So what I use there is this idea that there is a safe haven effect. So I use an index of political conditions abroad. So they are political conditions abroad, so they would be exogenous to economic developments in different UK local authorities, because it would be like, let's say a political crisis in a foreign country. And I say, well, if there are these negative shocks abroad, foreign buyers are more likely to invest in the UK housing market because it's a safe place to put the money. So I use that idea, and then I allocate these. So with these shocks, these would be the shocks, but then you need to allocate these to different local areas in the UK. And I say, well, foreign investors will go to places where other people, foreigners, are already settled, right? So they would go to local areas that have a higher share of residents that are non-UK born. Yeah. So I can go to the census, I can calculate, what's the percentage of foreign born population in different areas. So that's how I construct this instrument. And then I can estimate this and recover a beta that will have a causal interpretation. So this is just the instrument. I'm not going to go into details, but this Z would be a measure of political conditions abroad, and this FIC would be from the census and would be the share of residents that are born in a foreign country. So I also look at dynamic effects, and I look at effects at different percentiles of the distribution, because you could think, maybe foreign investment is only going to affect the prices of very expensive homes, right? That would be kind of a reasonable thing to think, because most of the properties that are sold to foreign buyers are, at the top end of the distribution. So I check whether there is an effect on prices also at the median and at the bottom end, so at different points of the distribution of prices. So I also look at this interaction with the elasticity of supply, just to see, is there something that we can say about different local areas depending on how responsive the supply is, right? So there will be areas where it's easier to build than other areas. In areas where it's easier to build, you might think if there's foreign investment, they just build more, and so you don't see such a large effect on prices. So, there is a version of the model to try to test for that. But just to give you the results, so when I look at prices, you see these coefficients here, they are positive. They have 3 stars, meaning they are significant in statistical terms. So this means that foreign investment increases prices. So if we have a 1% increase in foreign investment, prices would increase by about 0.4%. So you see that there is this positive elasticity. If you look at the dynamic effects, the effects are quite persistent. So you see them immediately, but you still see them 4 years after the shock. So, this positive effect of foreign investment tends to persist for quite a long time. And it is there at different percentiles of the distribution. So here you have the very expensive homes on the right-hand side. And on the left-hand side, you have the cheaper homes. At the 50, this is the median. And you can see that the coefficient here is this solid black line. The dashed lines are the confidence spans. And the coefficient is positive and significant at all points, although it is quite a bit higher at the top end of the distribution. So more expensive homes are becoming even more expensive because of foreign investment, but even cheaper homes are also going up in price as a result of foreign investment. So here I look at the effect on construction, and you see there are no stars, so nothing is significant here. So if we have more foreign investment, we don't see an increase in housing construction. I mean, maybe in the longer term, this is sort of a contemporaneous effect, but even in the local, in these dynamic effects that I do here, I do a similar specification for construction, and I don't see significant effects there either. When we look at vacant homes, you can see there is a reduction. So, sometimes you read in commentary that foreign buyers are buying for capital appreciation, but the homes are left empty. Actually, I don't find much evidence of that. I think what you see is that, foreign investment is actually reducing the number of vacant homes. And this is just a table showing the long-term vacant home percentage across different parts of the country. So it's high in the city of London, and then it's high in coastal areas, right? So where maybe, but it's not really a London sort of phenomenon of having a very large share of vacant homes. These are the effects by supply elasticity. So I was trying to see whether there is an heterogeneous effect here. So if foreign investment goes into areas where it's easier to build, maybe you don't see as a large increase in house prices. But actually the interaction term coefficients, so these coefficients here for this product between foreign transactions and high elasticity, they are not significant. So it seems like, prices are going up more or less by the same amount in high elasticity and low elasticity areas. And that's, I think it makes sense when we think that construction is not actually responding. So if construction was responding, you might expect to see that in places where there's more construction, prices don't increase as much. But we actually see that construction is quite unresponsive to foreign investment shocks. So to summarize the results, we see that there is a positive effect of foreign investment on house prices. This effect is larger for more expensive homes, but is there also at different percentiles of the distribution. There's no effect on construction. There's no evidence of buy to live, so of foreign investors buying homes and leaving them empty. And also there is no evidence of heterogeneous effects across local authorities with different housing supply elasticities. Yes, and that's all from me.
Okay, thank you very much, Dr. Sá, for the fascinating presentation. So now we'll have a discussion between Professor Yoshida and Dr. Sá. So perhaps, Professor Yoshida, do you want to kick off with a question?
Sure, yes. Thank you very much for a very insightful presentation and insightful research. And something I'm curious about is the overall vacancy in the UK. So you said foreign investment reduced vacancy rates, and also overall long-term vacant homes percentage is really low, generally low in the UK. My curiosity is that UK housing structure is long-lasting, but how come the vacancy rates are so low? Due to the accumulation of housing stock, and I would expect some higher vacancy rates in the UK. But do you have any insight why UK has so low vacancy rates?
Yes. I don't know if I really have an answer to that. I think it's a problem of supply and demand, and that's what explained this upward trend in prices as well, is that supply is relatively constrained. And, but there is high demand for housing. So especially in London and Manchester, where many people want to live, we have demand also by, international students and foreign investors, as well as local residents. And I think because supply hasn't been keeping up with demand, then you see, prices are bid up, and also vacancy rates are quite low. So, we don't see many properties being left vacant. So they're either rented out or they are owner occupied. I think in some kind of more holiday areas, you have higher vacancy rates because it's a second home.
I see.
But I think generally you see that there is this excess demand for housing. And
I see.
Yeah.
Great. Then the follow-up question is, when you see home price appreciation in London and Manchester, partly due to the exogenous impact of foreign transactions. Do you see migration out of those large cities to local area? My question is, how common is migration in the UK across regions?
Yes, so I haven't actually measured it, but what happens from observation is that people actually move to the suburbs to get a more affordable home. So if you have, central London prices are high, so people normally live there maybe when they are younger and they are renting. And then when they have a family and they need to buy, they just move out. Mm-hmm. Now, what happens in London, I thought it was fascinating what you said about commuting times, because, in London, I don't think the transport network is quite as good. So, I live in Surrey, for example. It takes me an hour to get to the Strand in central London. And that's if the train is running on time, which you never know. So, I think that that is a constraint, but still you have people commuting an hour into work. It's not uncommon. And it's exactly because of the affordability problem, that if you need a bigger house, you need more space because you have children, let's say. You end up moving outside. So you might go to Surrey, you might go to Kent, you might go to just north, like St. Albans or somewhere. So that's what most people would be doing. And then they would commute in, but, it wouldn't be a half an hour commute. It might be an hour, sometimes even longer. But yeah. Now, it's interesting. Yesterday, I was having this conversation with a colleague at work, was saying prices in prime London locations are falling. And I was quite surprised, but I went to the ONS and it's true. In the last year, prices in Westminster fell by 15%. So this is interesting. It will be interesting to see what happens. I think part of this is driven by Brexit because, you see after the Brexit referendum, there is a slowdown in house price appreciation in prime central London. And now you are even actually seeing decreases of, 15%, which is quite a large amount. It will be interesting to see whether this will then mean people will actually stay in central London and will not feel the need to go and move outside. House prices are still very high in Westminster and Kensington and Chelsea, even if they fall by 15%. So we'll see what comes out of it.
So, if I may, can I ask another question? So, is the any policy action in London helping that house price change as well? So I learned recently that UK has a very interesting housing policy targeting middle income households, like shared ownership. And so there are several interesting housing support programs in the UK, which is not seen in Japan, I think. So I wonder if you can illustrate some of the unique, housing policies in the UK, maybe especially in London.
Yes, so the shared ownership, it's not, it is available, but it's not very widely used, I don't think. But the government is thinking of what they can do to stimulate, measures they can adopt to stimulate housing supply. It's still quite uncertain at this point. We haven't got the detail, but there is a target to build more homes. So to try to tackle this affordability problem. It will probably be mostly incentives to, small, like house builders, right? So incentivize house builders to build more homes. Mm-hmm. And that is important because I do think the large appreciation we see is because there's excess demand, that supply hasn't kept up with demand. So we will see what exactly the details of the government policy will be, but the government is looking into incentives to house building for, which will target, I think, medium and small house builders. And also looking at the planning process, because the planning process is quite complex. There are delays and restrictions and the green belt. So trying to incentivize, more house building in, not in green belt necessarily, but try to make more make the planning process smoother and easier, less constrained.
And Dr. Sá, do you have any questions for Professor Yoshida, perhaps in the second half of this discussion?
Yeah. So I thought it's really interesting, the difference in Japan. I was very surprised to see such high depreciation rates. But you gave us a good idea of why that may be the case. But I wanted to ask about foreign investment. So do you have a sense of how important foreign investment is in the Japanese housing market?
Right. So unfortunately, we don't have official statistics about home buyers and foreign buyers and so on. So it's all anecdote and suggestive evidence only. But what we see in Japan is that we see rapid appreciation in housing prices only for condominiums in Tokyo and Osaka, nowhere else. Even the third largest city, Nagoya, Kobe, Yokohama, those famous cities don't experience house price appreciation. So what's happening, it looks like, is that when foreign people like to buy assets in Japan, of course they cannot really rent because it's really difficult to arrange a rental agreement with the foreign people. So they try to buy or own houses, and then their choice is whether to own condominiums or detached housing. But the detached housing, of course, requires a lot of maintenance and other things, community activity, and so on. So they prefer to live in condominiums, especially in central Tokyo area, because they are convenient locations. They provide a nice view of the city, and they have a good access to urban amenities and so on. So the looks like according to the price appreciation pattern, those sharp appreciation created by new demand is concentrated in only in Osaka and Tokyo's central high-rise or high-quality condominium.
Okay, perhaps one more quick question, Dr. Sá, if you have one. Otherwise, we'll go to the audience Q&A.
Yes, I was going to ask, do you think this large appreciation is something that will continue? Is it like something structural?
Right, right. So that's a good question as well. And one thing I would like to point out is that the Japan has experienced a rapid change in society after World War II. So the societal change created a huge obsolescence of old houses. So housing function has evolved over time very rapidly in Japan. The housing style changed significantly from right after World War to the current housing stock, so that old houses quickly become obsolete with the introduction of new housing function in the new market. That's one factor driving the rapid depreciation in Japan. Into the future, if those constructors or construction companies are keeping introducing new functions to housing, then we continue to see that type of obsolescence in the market. But if they run out of new ideas about the new functions for housing, then finally we can reach some sort of stable situation where depreciation is stabilized. But at the same time, we always have another factor driving depreciation is earthquake. So every 10 years, Japan tends to have large, huge earthquakes. And right after those major earthquakes, building codes tend to be modified. And once the building code is modified, all the buildings becomes incompliant with the new code, so that the market price for those new buildings incompliant with the new regulation tends to depreciate really fast. So as long as Japan continue to have big earthquakes, this process doesn't change. So I expect to have a fast depreciation in the future based on that factor as well.
I'm afraid we've run out of time. I see there are a lot more comments and questions. But thank you so much for all of your contributions. And thank you most of all to our two speakers, Dr. Filipa Sá and Professor Jiro Yoshida. We hope to see you again soon. Thank you
Thank you very much.
Thank you.